Yesterday, what we got, so we can review a little bit of yesterday. All right. Yesterday was awesome. So what we had in the morning was a simultaneous break. And what that means is the inside days and the broader averages and everything broke to the upside, which made it very simple. Really, I mean, you basically could have bought anything. So when we see that inside day break in the SPY, that means we can go after almost anything that's breaking. We had SMH, right? SMH, and then you get one of the things you can do is we can go after them fast movers that normally you might not want to touch because the big point gains are going to be those guys like the LRCX, right? We got that and all that kind of stuff. ABMD, all those real fast movers. And remember that Marianne grabbed this one here. Oops. Here. Right off the 15er, right here. All right, inside 15, 240, and in no time that thing was up $9 in 45 minutes. Right, so when the things are all breaking in the same direction, and even if if you get confused because they're all going and I don't know what to do, and you think in SPY, right, don't be afraid to go after UPRO. All right, get more bang for the buck. The simultaneous break is when we can go after those more highly leveraged stuff because everything's going. We want as much bang for the buck as we can possibly get, right? So another thing that we can look for, besides all those big fast movers like Tree and all those big dollar movers, is that when you have this, who hates this? I'll tell you, VXX, more bang for the buck. This thing dropped $5. So I'd rather have a $5 move on a $40 number than a $3 move on a $200 number, right? So that's where we want to be when stuff like that happens, right? Then we got lucky in the afternoon. BIIB, right? BIIB news hadn't even hit the tape yet, and this thing starts falling apart here. Right, and we were watching that. The good thing is you didn't have to be that fast. We had 15 minutes of it consolidating here and going inside, and we had that inside break. Joe was all over that. Right, that was a beautiful break. Nice quick $10 break in no time. Right, and the reason that this would get more exaggerated was because everything's going up. They're going to get medieval on this thing, right? Because if you're long this thing, it's going down on all time frames. It has full time frame continuity, the downside, the 2-2 reversal on the month. The weekly's blood red and been puking. It's red on the day, and when that 60 goes red, that means every known participant's a seller. Do we want to get short this thing? You bet we do. All right? These guys are in trouble. If you're long this thing, you got all sorts of problems, right? You got all sorts of problems, and we're going to help you with that. So, what do we have today? So when we have the opening, right, we want to know what's going on. So SPY here. Still inside week. Now it's green on the week, so if it's going to not be an inside week, it's going to be green on the day, the 60 in the week, right? But because it's in here, it's still considered consolidating. So right now, SPY is going to open 271. So the high here is 275. We're nowhere near taking that. 271 right now. So we go to the daily. Talked about this thing here, 272.36. Right, we get the lower lows and then potential to higher highs. So what we want to do here, first things first, obviously we look at the gaps in the morning, and I'm just getting in, so we're going to get to that. But one of the things we can look for is anybody taking out yesterday's lows, right? Because it's market psychology and time frame continuity. They got what they wanted. If you stayed long something, you got what you wanted. You got the market to gap up. But if your stock's going down in this, you got problems, and we're going to stick it to you, right? So that's one of the first things we're going to look for is things that are going down in this, right? So we've got some earnings to get to here, and we can look at that. But that's how we want to be. That's how we find exactly where we want to be at all times, right? Make sense? And Nikolai with the 222. Remember on the SPY walking up? SPY walking up. So what you're looking for, right, in a strong trend, right, like we had yesterday, and by strong trend, how we can define that is that the day, the 60, and the week are all green in SPY. Now we're countering the month, right? But on the shorter term stuff, when we know that we want to be looking to be buying stuff, what you can look for is a 2 to the downside, 2 to the downside, but then the 2 to the upside. That's the 2, 2, two, reversal back up, right? Because you know you're coming off the bottom of a triangle. You have to be because you're coming off a red bar and a lower low, right? So you can go after that thing right here. And then when it does it up in here, continuation, you go up here, two, two, two again, bam, to the upside. But what that does is like here, two, two, two. That ensures you're coming off the bottom of at least a shorter term triangle. And that's how you can get in on stuff. Can you dig it? Now it might come back down and make a lower low. I'm not saying that, but that's what you want to be looking for, and then you can do it again. Because remember, all these setups are designed to create winning positions, right? We want to be in a winning position. That's why we can cut and run on stuff that doesn't work. Just get out, because you can see from using all the things that we have, we can get in anything, right? And so if we look at like Cisco's gap in here, for newer folks, just when we look at Cisco, it's been in the weekend video a few times because of this. When I go through charts, and whenever you look at anything, you want to look at least 4 time frames, right? The monthly, the weekly, the daily, and the 60 at least, right? When people who don't do that have problems, right? They just look at the daily and the intraday. They have no idea what's going on, right? Micromanaging. So something like Cisco, when I go through the charts on the weekends, at night, I don't only just go through monthly, weekly, daily 60. I go through monthly. I have 2 sets of those, right? With going way back and then shorter term. So I'll have 2 monthlies, 2 weeklies, 2 dailies, and 2 60s. And what that helps me identify, something like Cisco, we look at a monthly like this, but I also look at it like this. 300 bars. We call this used to be somebody. So are you telling me since 2000 that Cisco hasn't grown at all, right? If they're willing to pay $80 for this thing in 2000 and we're in a roaring bull market, yeah, it could go back up there, no problem, right? So when we say used to be somebody, that's what we're talking about, right? And that's why in the weekend videos recently, you'll see talking about the regional banks, FitB, Key Corp. All these used to be somebody's, because if we're in a roaring bull market, there's no reason to think these things can't go back and go to the highs. Making sense? And so also, this is why we pay a lot of attention to the flip, the bottom of the hour, right? Because that 60-minute is going to reconfirm or negate what's going on today. Is it going to be a counter hour? Is it going to be a continuation hour? Is it going to be a consolidation hour? Right? And if it's a counter hour, that's when we can go after those guys that are in trouble, like BIIB. Because market psychology, as we all know, matters. So how we can gauge when people have to make a decision is how you've traded in the past. Let's say that you are long something and the market's going up and your stock's not doing anything. Right? You don't have to do anything because you're going to mentally sit there and be like, oh, maybe it'll catch up eventually because the market's still going, right? But when the market starts going back the other way, that's when you start to sweat, right? Be like, uh-oh, right? And we know that, right? And that's why time frame continuity can identify how many people are about to feel that way and then trigger other people where they go underwater and say, okay, here's when they're breaking the opening. Now all these guys go underwater. Now all these guys go underwater. And that's why we can use that shorter term stuff to trigger the bigger guys, right? If this fiver works and goes down through, it changes the continuity of the day. That's important. That's why we can use that shorter term to trigger the big guys. So we're always minding the flip, right? And any change in continuity is the same thing. We're always reconfirming or negating what we know to be true. And on a nice day yesterday, reconfirm, buy, right? On the 60 SPY. Buy, consolidate, buy, right? Right. And even in a very short amount of time, for the newer folks, you've seen what happens on the flip. Things change, right? That's because automated programs have to have a time what they're going to do stuff. And either those machines stay on or they don't, or a new one comes on, right? Because 70% of trading is automated. And that doesn't mean, and I want to be very clear about this. Automated trading gets a bad rap. Like everybody thinks it's high frequency, trying to pick everybody off or going after stops and stuff like that. It's not. High frequency stuff you wouldn't even notice because it's picking you off by the sub penny, right? So when you look like you got a dark pool print or something like that, that's them. Right? Okay, shop coming in now on the earnings too. Probably still going to be an inside day. So automated trading simply means that once they say 70% is automated, it doesn't mean it's all that flash stuff. No, what that means is you'll have orders that are just automated to buy and say, okay, we're going to buy it every 5 minutes, or we're going to buy it on the VWAP, or we're going to do stuff like that, right? And so if you have a big buy order, they stay on all day, right? And that's where you'll see these just really systematic power moves. Buy, 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 and tap down $7 as we start to put together the gap list, right? So right now I'm seeing NTAP, gap list, Cisco, SEDG, AMAG, Yandex, Teva, Riot, Trip, and I'm going to tweet this out. But let me just wanted to get this recorded so you have it. And yeah, I think that was a nice little session here. I'm going to end the recording, and then we'll get to the gaps and all that kind of stuff.